Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordeurn. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
We begin this out with stocks at record highs and the dollar at multi-year lows heading into the Fed's meeting. Priya Misra of JPMorgan writing, expect Powell to focus on the Fed's mandate rather than the politics. Despite all the Fed chair drama, we have a divided Fed with different views on risk to the mandate, and the chair has only one vote. Priya joins us now for more. Priya, good morning.
Morning.
Is this a different Fed? Because that one vote used to count for quite a lot.
I think, the Fed chair's job is to sort of build consensus. But look at, what you've been talking about, there are so many cross currents here, with this highly concentrated GDP, the K-shaped recovery, the higher, low fire economy, the risks to the mandate are sort of two-sided. And that's why we have a divided committee. So can any Fed chair sort of build consensus? I think Chair Powell did a lot, but they've already reached the sort of realm of neutral. So I think any Fed chair coming in is going to have to contend with the fact that you're close to neutral. It's between 3 and 4. They're right there. So they're going to have to wait for the data. So, I think the pushback around from the Fed, the pushback from the market around Fed independence, I actually think the fact that everybody wants an independent Fed, the bond market, the president, I think that's actually the Fed is pushing back. I think this is all good news. The Fed chair is extremely important. We'll have to listen to we'll have to sort of listen to the entire committee, but it is just one vote, and we'll have to listen to everybody at the Fed, all 12 voting members and the non-voting members.
Was Chair Powell's last rate cut at the last meeting?
Given the data right now, yes. He's around till May. There's a lot of data between now and May. So can he cut, in March? So we're going to be watching both inflation and the labor market. The labor market does seem to have stabilized. We were getting those really high layoff announcements, and then, initial claims is not showing a pickup. So I would say base case, this, we might have seen the last rate cut, but I don't think you're going to get any confirmation of that. The inflation data has been weak, but it's so shutdown impacted. So we're going to have to see between the tax refunds on one side and do we get this shutdown impacted data showing inflation, some heat in inflation. I think for now they might not do anything. The market's not pricing in any rate cuts in the first half of the year. I think rightfully so, but we're going to watch all of the data. I hope there's no shutdown, because that's going to, we're just getting somewhat clean data. I would really hope that we continue to get that clean data. The Fed is otherwise likely to stay on hold. But I think rate cuts second half of the year is our base case. I think, if inflation continues in its current downward trajectory, I think there's a few more rate cuts this year.
Well, isn't there a chance that Jay Powell might be there for those rate cuts, given the fact that Senator Tillis is basically saying, I'm not moving ahead with the pick until the DOJ investigation is wrapped up? How are you thinking about the politics? Do you think it will seep into the monetary policy decisions?
No, I don't think politics will drive in. I think the Fed does what they've always done. They look at the data, they assess risk to the outlook, and then they take an action. I think it's actually excellent that Chair Powell pushed back as strongly as he did, and that, I think, provided cover to Senator Tillis and others to push back as well. Where the politics can come in is the DOJ will need to wrap up pretty quickly. Otherwise, we're not getting another Fed chair. Mm-hmm. I think the likelihood, to your point, maybe Chair Powell is more likely to stay on as a governor. So, it remains just one additional vote that, or one person that potentially could be political. So I think that's where it can come in, the makeup of the Fed. But I think the Fed is still going to say, let's look at the data. There are very vocal hawks out there who are concerned about the inflation risks.
When it comes to the body, what you're talking about, if he stays on as a governorship, it's a deliberative body. So isn't this working against what the president wants? If Fed Chair Jay Powell is only going to stay on now because he feels like the institution's under threat?
but I would say Chair Powell is extremely credible. I think the administration wants rate cuts, but in a credible fashion. Because we've seen, if the market gets nervous that the Fed is losing its grip on inflation, longer-term inflation expectations, the long end is going to get unanchored. The president's focus on the 10-year, the bond, every time the bond market speaks, becomes yippee, we see some reaction from the administration. So I don't think the president or the administration would want to put somebody who's not credible. Chair Powell is extremely credible, and he's gone out on a limb, I think very deliberately, to say that he cares about Fed independence. I think that's actually good for the institution, it's good for the bond market, and I think that's why the bond market, doesn't this feel like the longest month of the year? It's just begun, but we've had so
totally
much,
agree.
Right? We've had so much thrown at the market, the 10 years at 4.25. I think that tells you the market is saying, let's put everything together. We have a credible Fed, we have a lot of cross currents, but we're still in a soft landing and inflation's heading lower, so those rate cuts can happen just maybe a little bit
I think I saw a headline yesterday, or rather a picture out on social media that said something like it's January 2772nd.
Yeah, I saw that meme.
Which is what it feels like, right? I think there's a disconnect, a divide between the way the financial media is talking about what's happening in markets and what's actually happening in markets. There's a headline that I keep seeing every time we have a down day for the US dollar, which is Sell America. And then I look at the bond market and it's at 424, 423, 420 something. And then I hear headlines and people talking about stories that consider a debasement trade, and this is why everyone's piling into gold, and then market-based expectations for inflation are still really, really subdued. Right. I was looking at the data for foreign holdings of treasuries at the back end of last year. Record highs, never been higher. Is there a divide between the stories you're seeing, the headlines you read, and what's actually happening in markets at the moment?
So, that famous saying, never let the facts get in the way of a good story. I think there's a little bit of that. There is a good story, sell America. There's so much chaos, political chaos. You should sell America. Let's look at the facts. We have auctions every other week. Auctions have been going fine. Foreign demand is strong. And I would look at, not just holdings of treasuries, look at holdings of corporate bonds. We've had a record corporate issuance month this year, this month. We've had significant inflows from foreigners. So why are credit spreads where they are? We're seeing the demand. So the technicals for fixed income, technicals for equities remain strong. So it's hard for me to say sell America when the rest of the world is still buying American assets. The US is still growing significantly, outperforming the rest of the world. We still have the most diversified, liquid, deep markets. So I think the dollar is a separate issue. Maybe it's a little overvalued. Our model still suggests the dollar is a little overvalued. You have this whole yen intervention. I don't know if they intervened or it was verbal intervention. The president saying he's okay with a lower dollar. I think there's a little bit of a valuation with maybe, the dollar can weaken. I think it might be a hedged dollar risk rather than sell America. We're not seeing any evidence of a sell America across asset classes. So I would say it's not really sell America going on.
It was interesting last week, just listening and reading the way that people were talking and writing about what was developing in financial markets last week. The bigger move was in Japan, yet we woke up to stories about sell America. And I was actually so impressed by how well the Treasury market actually stood up to the convulsion in the JGB market. The fact that we saw moves of 20 to 30 basis points to the long end of the Japanese curve, and we were up by mid-single digits here in the Treasury market. I'll take that any day of the week, wouldn't you?
Right.
Given the move we saw in Japan.
And which is why most of us are not sleeping a whole lot, because we're watching, the 40-year auction last night in Japan was actually okay. I think the Japanese, and we're watching the election next week or the week after. So I think, yes, the Japanese long end is what I'm watching, because, that global term premiums are highly correlated. So you can have no sell America, but you can have a global term premiums have to be higher, and therefore all long ends sell off. So let's watch what do the Japanese do around their fiscal side. Their fiscal situation is not that bad, actually. So, but do they cut some of that long end supply? What do we do in the US? Secretary Besson can cut some long end supply. I would say as a market participant, there isn't that much demand for the very long end. So maybe cut the 20-year, cut the 30-year. We have the Treasury refunding next week, which we'll be watching for any hints of that. So is there a supply-demand mismatch globally in the long end? Perhaps. And that's where I think, there could be some issuance shifts. But you're right. This was a Japan, so it was a sell JGBs rather than a sell America.
I should clarify. I don't think you should be ignorant of the risk. I'm just sort of highlighting it's an observation, not a judgment about where we go, just an observation of last week, just how well the Treasury market withstood some of this. I do think there's a warning coming out of Japan that ultimately, at some point, regardless of how big your central bank, how big that role is in your market, at some point, the market will push back against the government going too far. And I think that's something you've got to keep on your radar for this year at a time when we go into the midterms, and we've heard all kind of suggestions about how we boost this economy in the US. My question, Priya, would be, in fact, my number one question would be, why is the Treasury market so resilient in the face of all these risks? Why is it standing up so well? Why did it perform so well relative to Japan last week?
I think it's the inflation story. I mean, I look at fundamentals. In the inflation trends, broadly speaking, are all heading lower. And that's going to allow the Fed to cut. It's going to allow the market to price in these rate cuts. And then we look at further out the curve. You look at term premium. It's actually risen significantly. We're getting paid up, much more today than over the last 15 years to extend out in duration. So investors like us will say, okay, we've broken out of the range. Maybe duration risk is attractive, and maybe we should be buying some longer end treasuries, apart from, just buying credit. So it's been a credit story. At some point, it's going to be a duration story. So we saw it as an opportunity to extend out the curve. I think that's why that long end has been contained. That's one. The other one, I would say that the president cares about the long end. I mean, if housing affordability is all about the 10-year, we've heard him last year talk about the yippee bond market. Secretary Bessent was out there, talking to the Japanese officials, the yen intervention. I think that tells you that there is focus from the administration. When the bond market speaks, every other market and the administration listens.
This is why I think so many people are so much more comfortable with the dollar trade and pushing it to be weaker.
Right.
Because if you had total control of the Federal Reserve, there's one thing you can control, and that's yields. You can just buy it. You can anchor yields. Japan did that. They've shown us the playbook. And if you're really worried about mortgage rates, you could pin the long end of the curve down. What you can't control is how the FX market would respond to that, and we know how it would. You'd be pushing a much, much weaker dollar, and that would be the release valve. And I wonder if that's when the market's coming around things. Just thinking about the range of risk and the balance of risk over the next 12 months, that's the easier trade to make here. Just push through foreign exchange compared to other asset classes.
I think relative to what the administration wants, I will push back that the Fed is not going to buy the long end. Just
no,
because
I'm not
the
saying
long
they will.
Selling off.
Absolutely.
But maybe
not.
There's a supply issue. Maybe the Treasury can issue less. Or people like us would say, at some point, I'm getting paid up. The curve is steep enough that I'm going to move out the curve. It's a positive carry trade now to be long duration as a hedge. And that's the other thing, right? With valuations where they are, I might want a hedge here. And the front end was extremely attractive when you were getting 5.5%. Now, well, that front end is much lower. The Fed's cut rates. The 10-year is a much better hedge to risk assets. And I think that's why investors like us who are buying credit, who think we're in a soft landing, will say, let's just hedge and buy a little bit further out the curve. And even though it's not the Fed that's pinning, I think that demand starts to pin that long.
Yeah, not my base case will get yield curve control. I'll throw that out there. I'm just saying from a market participant's perspective,
True.
I think right now they feel like there's less resistance in foreign exchange than there is in, say, the bond market trying to push yields higher. Just one way of thinking about things. Stay with us. More Bloomberg surveillance coming up after this. Coming up tonight, programming note on Bloomberg TV, 9 p.m. Eastern Time, the latest episode of the David Rubenstein Show, Peer-to-Peer Conversations. David joins us now for more. Looking forward to this one with Anish Shah. David, good to see you, sir.
My pleasure to be here.
The infamous dinner last week, we bumped into you at the World Economic Forum in Davos, Switzerland. You were in the room, I believe, when Commerce Secretary Howard Lutnick delivered that speech. How controversial was it?
Well, it was controversial, I suspect, but he didn't think it was controversial. There was a dinner, it was the welcoming dinner from the host of the chair of the World Economic Forum, which is now co-chaired for at least the interim period of time by two people, Larry Fink and Andres Hoffman from the Hoffman-LaRoche family. And they had about 5 speakers who spoke, and Howard Lutnick was the last speaker who spoke. And it was something that got people's attention, I'll put it that way.
Is it curious that he was the one to deliver this message? The first time I ever met Howard Lutnick was at Davos years ago before he was Treasury Secretary. He's talking about the global elite. Well, no offense, Mr. Commerce Secretary, but wasn't he part of one that he now is saying he disowns?
He is a unique figure, and I think he's gotten a lot of leeway by the president to negotiate a lot of these deals, and I think he's very much enjoying the job, being my impression. I co-hosted a lunch with Dina Powell later in the week, and he came to that lunch and spoke as well. And his message is pretty consistent, so I think he's not going to change. And he's pretty happy in the job, and I think the president seems to be happy with him. So
that is a very diplomatic answer. Overall, what did you make of this year's Davos?
Well, it was a transition because Klaus Schwab, who built it more than 50 years ago, was no longer the chair. He wasn't there. And so they had new leadership. I think there were more CEOs than they've ever had before. They had more foreign leaders. Virtually every European leader showed up. And clearly, when the President of the United States shows up, it tends to dominate the news. And a lot of people stood just watching President Trump's speech for an hour or so. And everybody was waiting for the punchline. And the punchline that people were expecting didn't show up, which was that he was going to use military force. That didn't show up. So that was the big news. And I think people were relieved about that generally.
I welcomed some of the developments in the last week. It just felt like corporate America has shifted away from virtue signaling, and we're just focused on business now. Is that your sense of a shift as well? Did you witness that last week?
Well, after the Greenland thing kind of went away a bit, people are focused on the Fed. And though, as you pointed out already, the Fed's decision is pretty much as well known for today. And then people are looking at earnings, and people are wondering where the deficit is going, the debt, the U.S., and also whether there's going to be a government shutdown. And I think both sides, the Republicans and Democrats, do not want to shut down. They are really trying hard to avoid a shutdown. I suspect they will avoid it in some way.
We don't want to shut down. We've seen all the headlines about Sell America in financial markets. But then I listen to the CEOs in America and the global CEOs as well who are investing in America. Do you sense a disconnect between the headlines and where the money's going at the moment?
Well, there's no doubt that people are a little more nervous about investing in America than maybe people would like who are trying to get them to invest in America, because there is some concern about the dollar going down. If you invest in the United States and the dollar goes down, the value of your investment obviously is not as good as you thought. But it's not been the major cause of concern for foreign investors. They're just worried about where the U.S. government is going. It's very hard to predict where the U.S. government is going for a lot of foreign investors. People want, business people, predictability. Tell me what the rules are, and I will follow the rules. And sometimes the rules are unpredictable or they change a lot. So to the extent that there's consistency, I think more and more people will invest in the U.S. But to the extent that there's inconsistency, people will pull back a bit. And particularly the dollar is an issue as well.
But that's Trump in a nutshell. Uncertainty is a feature of him. That is what he does. And now it's an election year. So what kind of unpredictability can we see this year alone?
Well, I can't predict the unpredictability of the leadership of the government, but I would say there are a lot of issues that people are worried about. And right now, I would say the U.S. economy seems to be doing pretty well. I think growth is pretty good. Inflation's pretty much under control. Relatively speaking, it's not going to be at 2%. And unemployment is at a tolerable level. It's not as low as we might want. But generally, the economy is in pretty good shape. And whatever people might say about Jay Powell, and I'm a big supporter of his, we haven't had a recession under Jay Powell's leadership. Normally, Fed chairs often get blamed for recessions. Other people get blamed, too. But he's had to increase interest rates to deal with high inflation, and he's had to lower them when inflation came back. And normally, when you increase and you decrease, you get some kind of recession along the way. We haven't had a recession. So in my view, he's done a pretty good job.
Having known the man, do you think he's going to entertain any questions today regarding will he stay on after his chairmanship, or the more sort of stance he's taken against the White House?
I don't want to pretend to speak for him, but I would be surprised if he said anything other than, here's what we did today.
Boring.
But it's actually interesting because when you had previous Fed chairs, they didn't tell you what they were going to do in advance, and they didn't explain it 30 minutes later. He does it in English so you can understand. So I think to his credit, he actually explains what he's doing, and people can understand it. Many times the Fed never actually had press conferences before. So I think he's done a pretty good job, and I suspect in the end he will announce at the appropriate time what he's going to do.
He is not Greenspan, that's for sure. It's a very different communication style, without a doubt.
It's different than Alan Greenspan or Paul Volcker. They were more, I would say, difficult to understand.
David, tons of volatility around this institution. I've been surprised by how it hasn't really been consequential at all. in financial markets. I struggle to find a read-through from the volatility around the institution and how it's rippling through financial markets. In fact, the Treasury market's been very resilient in the face of a lot of risk. As a market participant like yourself, what's your conclusion as you see that play out?
Well, I think people are unclear where the government policy is in some areas, and therefore they are hesitant about making some long-term commitments. But on the whole, the business community is more or less supportive of what the federal government is doing. I mean, most of the CEOs are more or less in line. I mean, they don't agree with everything the administration is doing, but they recognize that there's less regulation than there was before. It's easier to get a decision about mergers or acquisitions than it might have been before. So I think some business people are pleased with it, but some business people are basically doing what they need to do to help their company, but they may not personally believe in everything that the president is doing.
Stay with us. More Bloomberg surveillance coming up after this. So if you're sitting here thinking the president could announce this morning, and let's say he did, when you start thinking about the confirmation process, the senator from North Carolina is telling you he's not going to get up and open the door and let people through anytime soon.
No, which is why if you're the president of the United States and you heard our interview with Senator Tom Tillis, you're thinking, why would I make an announcement so soon? You want to potentially wait till you know the DOJ investigation to Powell is going to be wrapped up, because Tillis is not moving until that moment.
Tobin Marcus of Wolfe Research has this to say. Rick Reeder is now viewed as the odds-on Fed chair favourite. We're unconvinced. We think both Kevins are still strong possibilities. Tobin joins us now for more. Tobin, I want your view on what is just holding things up here. Why is the president dragging his feet when he's told us for quite a while he knows who it is?
Well, I think he's still trying to find the best option among a set of options, none of whom offer exactly what he wants. Reeder, the current perceived favorite, has a lot to recommend him, but he certainly is not a Trump loyalist by any stretch. As Tyler was just discussing, there's this issue about his political donations. With him now sort of in the spotlight for the first time, I think you're going to see knives come out for him a little bit. Larry Kudlow yesterday published an op-ed essentially saying, don't pick him, pick one of the Kevins. And, I think in a similar way to how when Hassett was the perceived frontrunner, that's when the White House started to get pushed back about the potential bond market concerns you could see there. So, I think he's cycling through his options and doesn't see anything that he's completely compelled by.
I loved your note, reading the tea leaves. When it comes to the tea leaves, to the discussion Jonathan and I just had about Senator Tom Tillis, do you think that is why this administration doesn't feel any urgency right now to have their pick?
I think Trump is I think the biggest holdup is the decision-making process itself. And I do think that Trump is still trying to find the best person, with none of them being perfect. That being said, I take Tillis completely at face value that the probe by D.C. U.S. Attorney Pirro is going to need to be wrapped up and resolved definitively before he's going to be willing to let any of these people through. I think the view that Reeder has some confirmation edge is basically wrong. I think once you get Tillis satisfied about that probe into Powell, none of these individuals are going to have any trouble getting through the Senate Republican caucus. Hassett's the person that markets have raised concern about, but he's been working in Republican politics for decades. He has very strong positive relationships across the Senate Republican caucus. So, the notion that you could get Reeder through but not some alternative, I think is fairly wrongheaded. You're
pointing to something I read this morning in the Wall Street Journal about the fact the president is looking for something maybe he won't ever find. You're talking about this perfect candidate, this unicorn. What does that entail? Can you define for us who that would be in front of this president's eyes?
Yeah, he just last week at Davos was very forward and very explicit about wanting loyalty. He specifically complained about disloyalty in those words. He talked about all these people seem great until you nominate them, and then they start making decisions that you don't like. They start, hiking rakes when he thinks it's inappropriate. That's the exact criticism he's leveled at Powell, who also came in with sort of recommendations from Trump's economic staff, but without that personal relationship. And he, of course, has regretted that decision. So I think he wants someone who he can rely on in that way and who's going to listen to his views as he continues to articulate them, but also someone who brings bond market credibility and doesn't raise acute concerns about Fed independence. And there's a deep tension between those two.
Tobin, we've got to keep our eye on the geopolitics as well. This from the president just moments ago on social media, a statement from him. A massive armada is heading to Iran. It is moving quickly with great power, enthusiasm and purpose. It is a larger fleet headed by the great aircraft carrier Abraham Lincoln than that sent to Venezuela. Like with Venezuela, it is ready, willing and able to rapidly fulfill its mission and with speed and violence if necessary. Hopefully Iran will quickly come to the table and negotiate a fair and equitable deal. No nuclear weapons, one that is good for all parties. Time is running out. It is truly of the essence.
So the president is saying he wants Iran to make a deal. He then also continues to talk about the fact that they didn't make a deal and there was, quote, Operation Midnight Hammer, which we saw last year. The president right now is setting almost a red line. Come to the table or I am prepared and I have my toys out there in the sea ready to go and I am prepared to strike if Tehran does not feel willing to engage.
Tobin, how likely is it that we take on another kind of military front in Iran?
I think fairly likely. The president sure seemed like he was leaning towards intervening when the protests were at their apex a couple weeks ago. At the time, I think the lack of military assets in the region was one of the obstacles to doing that, along with some concerns from regional allies, along with, I think, some real questions about what efficacious targets might look like. Unlike in Midnight Hammer, where it was very obvious we were targeting the nuclear facilities, if you're trying to degrade their ability to oppress the domestic political opposition, what are you striking? Police barracks? I don't think anyone really believes that a decapitation strike against Khamenei, if they can even find him, would result in regime change. I think ultimately is what the president wants here. So, he sure seems to be wanting to strike. I think at a minimum, he's very focused on creating that optionality and leverage to be able to pursue a range of options. But it does seem like some kind of strikes eventually are likely.
Tobin, to that point, even if the United States were to get rid of Khamenei, does the regime still continue?
Yeah, I think the only way that you see actual regime change is kind of cascading defections among the security elite, and we've seen no sign of that whatsoever. Generally, that happens when they're asked to fire on protesters. Like if they refuse to do so, that's when you can start to see elite defections. And of course, they just massacred thousands of civilians who were protesting in the street. So I think if we were going to see it, we would have seen it. Replacing one person at the head of the regime, I don't think there's any plausible scenario by which that would result in the entire regime turning over.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.